Welcome to the Purdue Commercial AgCast, the Purdue University Center for Commercial Agriculture's podcast featuring farm management news and information. I'm your host, James Mintert, Emeritus Professor of Agricultural Economics at Purdue University, and joining me today is my colleague, Dr. Michael Langemeier, who's the Director of the Center for Commercial Agriculture and also a Professor of Agricultural Economics here at Purdue. We're going to review the results from the November 2025 Purdue University CME Group Ag Economy Barometer survey of farmers from across the nation. Each month, we survey 400 farmers across the U.S. to learn more about their perspectives on the ag economy. This month's Ag Barometer survey was conducted from the 10th through the 14th of November. And Michael, the Ag Economy Barometer index jumped up 10 points this month to a reading of 139. That leaves the index at 19 points lower than it was in May, which was the index's high point for 2025. Were you surprised at the jump?
No, I wasn't surprised at the jump. You never know how big the jump's going to be. But the October survey, it was mid-month October, and it was before the trade agreement information related to China. And so this survey took that into account. And I think that was why the barometer jumped.
You know, if you look at it, it was really all driven by an improvement in the index of future expectations. People became more optimistic about the future. Current condition index actually fell a couple of points this month, whereas the future expectation index was up 15 points compared to where it was in October. And so that transition really, I think, accompanies what was taking place with respect to trade prospects. And we'll talk more about that a little later. But clearly, people became more optimistic about trade in the month of November relative to where they were in October. And in fact, you know, one of the things we looked at was the percentage of people who say it's going to be good times in the next 5 years versus the percentage of people say it's going to be bad times. And you can see an improvement there, right? There were fewer people saying they expect to see bad times and a small increase in the percentage saying good times. So really it was about losing some of the negativity. Is that right?
And particularly for the crop producers in the survey.
Yeah. If you look at crops versus livestock, and keep in mind what happened in between that October survey and the mid-November survey that we did, cattle prices dropped pretty sharply. They were still at profitable levels, but pretty sharp decline. And when you ask livestock outlook for the next 5 years versus the crop outlook for the next 5 years, it was radically different, right? The livestock numbers dropped, I think, all the way from 70, which was one of the highest readings we ever got in percentage of good times, all the way back to 49%. So a 21-point drop, whereas the crop side basically moved sideways, right?
Yes.
So the Farm Financial Performance Index rose 14 points in November to a reading of 92. That takes the index back near where it was in late summer. And this month's index, so even though it was up, is still, I think, 17 points lower than it was in May. And of course, May was when many of our indices actually kind of hit their peak for 2025. So I don't know about you, Michael. I was a little bit surprised to see the jump in that index, at least to this magnitude.
Yes, I was too. I mean, this index tends to be highly correlated with the index of current conditions. That index was flat this month, and this one increased quite a bit. And so that was a bit of a surprise. And I point to exports. You know, the positive news regarding to trade agreement with China, I think was very positive for this index.
Yeah, normally I would have expected that to also be reflected in the current condition index. And I think for some reason, we kind of got this blending of current and future going on with this particular survey. And so people just became more optimistic about where their farm was at. I think in some respects, people are probably looking at the value of their inventories, right?
Yes.
Corn and soybean prices rose significantly.
Yeah.
All those crops that were already sitting in the bin all of a sudden look more valuable than they did a month ago.
Definitely.
So the Farm Capital Investment Index, I think, fell 6 points to a reading of 56. The percentage of respondents who chose good time fell to 16%. That's down from 24% in October, while the percentage who chose bad time fell 2 points to a reading of 60. And I think a weaker livestock outlook probably had some impact here. I think without that, this capital investment index might have gone up a little more.
Yeah, you're probably right. But really, this index has been kind of seesawing back and forth since about February. It's ranged from about 55 to 65, and it seems like we're up 1 month and we're down the next month. And so I don't know if these changes are necessarily significant.
That's a good point. So we previously asked back in September, if a trade war leads to lower prices for U.S. ag products, how likely do you think it is that farmers will receive compensation similar to 2019's market facilitation program? The totals of the likely and very likely categories didn't change a whole lot. I think back in September, 83% said it was either likely or very likely. This month, it was 76% said likely or very likely. But what did change was we kind of flipped those categories in September. I think it was 62% said very likely. This month, that was down to 16%. And in September, I think 21% said likely. This month, I think that was 60%. So people became less confident that an MFP payment was going to be made, although overall, they're still somewhat confident, right?
This has to be tied again to the export news. I mean, people are thinking, well, the prices are a little bit better. Maybe it's less likely that we will get this payment. And I think it reflects in this survey result.
Yeah, and I think that's exactly right. And what's interesting is how it changed overnight, right?
Yes.
Because I think it happened that week.
Yeah.
So the follow-up question was, if USDA provides an MFP payment to compensate for weak commodity prices, what will be the principal use of the payment on your farm? And the results are pretty consistent across the two times we asked it. We asked it in October. We asked it again here in November. This month, 58% said they would use it to pay down debt. Back in October, it was 52%. Only 11% this month said they'd use it to invest in farm machinery. I think in October it was 12%. So pretty consistent. I mean, and even if you think about the working capital category, which was 21% this month and I think 25% in October, basically people said they're going to use it to repair their balance sheet, right?
Yes. And this makes a lot of sense from a repayment capacity standpoint, because when you calculate repayment capacity, you tend to look at family living. Do I have enough money to cover family living? Do I have enough money to repay debt? And then after that, looking whether you have enough money for machinery. And I think what this is reflecting is they want to restore their balance sheet a little bit, but also there just isn't enough cash flow left to spend a lot of money on new investment.
Yeah. And the related point on this survey is we wondered how this would play out when we posed the question and had really kind of talking about it. One of the categories was use the payment to cover family living expenses. And the results are pretty consistent. In October, it was 11% said they'd use it to cover family living or help cover family living. This month, it was 10%. My read on that is that those are the farms that are under a significant amount of financial stress.
I would agree. I mean, that percentage is a little higher than you'd think if there wasn't financial stress.
Yeah, definitely. Right.
Yeah.
So we'll ask this question again, depending on how things play out. But I think this is maybe one indicator of the amount of stress that's out there. Follow-up question we ask all the time is, what are your plans for farm machinery purchases in the upcoming year compared to a year ago? And if you look at the responses, not so much a 1 month change, but over the course of the last roughly 4 months, there's been a little bit of a trend. Fewer people are telling us that they're going to reduce their purchases compared to a year ago. More people are telling us that they're going to hold their purchases constant with a year ago. Not enough of a shift to turn around what's going on with respect to farm machinery sales, tractor sales, combine sales, four-wheel drive tractor sales. All down sharply, and I don't think that's changing, but maybe just a little more positive
And then
outlook.
just to reiterate, this didn't change from last month. And so you have some positive export news, and you really don't have much change at all with respect to the plans for machinery purchases.
And that's consistent with the prior one where they said that they, how would you use an MFP
Repay
payment?
debt.
Yeah. The short-term farmland value index was up 3 points this month to a reading of 116. It's up about 10 points over the last 2 months, so it's been kind of a nice rebound there in terms of optimism. That puts the index back about where it was this time last year. This time last year was at 115. And of course, you go back 3 and 4 years ago, the index was significantly higher. So if you look out over just roughly the last year, kind of a sideways move, modest amount of optimism. Do you agree with that?
Yeah, I think stable land values is what this is suggesting.
Yeah, and a 2-month rise, again, reflects a little more optimism than what we were picking up previously. And if you look at the long-term farmland value expectation index, that did surprise me. It set a new record. It's at 165. That's only up 4 points compared to last month. But if you look at it from a historical perspective, we've only been close to this high a couple of times. We've been at 158 a couple of times previously. But these last 2 months have been very strong. When the 161 showed up last month, which was about a 15-point rise compared to September, I wondered if it was just a 1-month aberration, but apparently not.
Yeah, this one here is a bit surprising, a bit head-scratching, if you will, because you look at corn futures quite a ways out, and they're not, just for basis, they're not much above 450. That doesn't lead me to believe that the fundamentals are that strong long-term. They're not weak necessarily, but they're not that strong, but there's a lot of optimism long-term, and this is clearly shown in this long-term farmland value index.
Do you think this is related to what's going on in gold?
Yes, that's a very good point.
So your answer is yes, it is?
It is related.
So you've done quite a
Yeah.
bit of research on farmland values from the long-term perspective and portfolio allocation, et cetera. How does
When
those
people have when there's a lot of uncertainty, particularly when there's a lot of uncertainty about prices, inflation, they tend to flock towards farmland, real estate, and gold. And farmland is an excellent hedge against inflation, just as good, if not better, than gold. And so that probably is providing some strength there. Very good point.
We did a follow-up here. We asked this twice in the summer months and then didn't do it for a couple of months. But what are your expectations for cash rent in your area in 2026 compared to 2025? So this went to crop producers. I think this month might have only gone to corn and soybean producers. So really kind of a reflective of what's going on in the Corn Belt, perhaps. 74% said they think cash rents next year will be about the same as this year. That really hasn't budged. Last summer, it was 73% one month, 75% one month.
And that's what we were checking, obviously. We wanted to know whether the recent news was going to maybe see some increases in cash rents, and that wasn't the case. Most people are saying hold the ship, about the same as last year.
And we're probably at the stage where the bulk of those agreements have already been made.
Yeah, they've already been made.
Yeah.
So they're not going to make any changes.
Yeah. Question we've been asking all the way back to 2019. Over the next 5 years, do you think ag exports are more likely to increase, decrease, or remain about the same? I think you probably referenced this earlier. The percentage of people who say it's going to decrease dropped off pretty sharply. It went to 7% say that exports are likely to decline over the next 5 years. That's cut in half from last month, 14%. And really, it's been almost 5 years since we've seen that lower percentage of people who think exports will decline.
Yes. And so, this is a 5-year question. So they're obviously expecting the trade agreement with China to be positive longer term.
Yeah, very interesting. Just a little bit of a shift there. The percentage you think it's going to increase really didn't budge this month. What we lost was some of the negativity, right? And I think you're right. I think that's reflective of the trade agreement. And first time we asked this question, this went to corn farmers only. Over the next 5 years, do you think U.S. soybean exports are more likely to increase, decrease, or remain about the same? And almost half, 47% said increase, 45% remain about the same, but only 8% said decrease. And I think that's really consistent with the prior question, right?
Yes. It's a little hard how they're answering this question using previous years as the base. I would argue they're probably going to be about the same. Joanna Clusi, one of our colleagues, has done some analysis related to this. If the 25 million metric tons that are supposed to go to China in 26, 27, and 28 actually materializes, that's slightly under the 5-year average ending in 24. And so that would say about the same. And so maybe we want to word this question slightly different next time.
Yeah, good. That's a good question. We've been asking this question for some time now. Looking ahead to your next year, what are your biggest concerns for your farming operation? And people continue to point to high input costs. That never changes. I think it's been that way every single time we've asked the question. And then so a follow-up was, what changes, if any, will your farm make in 2026 to respond to low corn prices? And this only went to people who said they planted corn in 2025. And about 4 out of 10, 39%, said they would not make any changes. Among those who said they would make some changes, the top 2 choices were adopt lower cost seed traits and reduce phosphorus application rates. A smaller percentage said they would reduce or look at reducing N rates, nitrogen rates, or reducing seeding rates. What do you make of that?
I'm not too surprised at the phosphorus and maybe changing seeding traits. Those are some things you can do, probably without not a lot of impact on yield, particularly the phosphorus. You've got quite a bit of soil phosphorus in the soil. Maybe you can skip a year or something like that. And in seed varieties, you probably can make some changes there without impacting the yield very much. I was a little surprised at the N rate and the seeding rate, however. I thought those were closer to optimal, and so no changes would probably be needed, even if prices are relatively lower for corn or fertilizers relatively higher or lower. I thought those wouldn't change very much.
Yeah, you and I both did a number of workshops back in the 2014 to 2019 era when we had the last downturn, and trying to help people identify ways to reduce their cost per bushel. And, reducing N rates is tricky. You really run the risk of cutting back on yield. And if you're not careful, you might actually increase your cost per bushel of output. Same story with respect to seeding rates. So, and my view of this is these are things that people are thinking about doing.
Yeah.
They haven't committed to doing these things. So we'll see how that plays out. We'll probably ask this again over the course of the winter. It gets a little closer to planting time. Couple of questions that we've been asking here recently. First one is, do you expect the increased use of tariffs by the U.S. to strengthen or weaken the U.S. ag economy in the long run? The results haven't changed dramatically with respect to people saying, a majority saying that they expect to see that this will actually ultimately strengthen the ag economy. But we do have less confidence in that. We first asked this back in the spring. 70% of the people in the survey said it would strengthen the ag economy. I think that's down to about 58% now. So we still have a majority, but it's a smaller majority. Probably the bigger shift is the percentage of people who say that they're uncertain how this is going to play out. In the spring, only 8% of the people in the survey said they were uncertain. The last 3 months, that's roughly doubled. And this month it was 17%. Last month it was 16%. So there has been a shift. People are less confident, although we still have a majority think it's going to play out okay. What's your take?
I'm not too surprised that the uncertainty went up a little bit because look how long it took to get that trade agreement with China. I mean, we were waiting on that quite a while. It didn't happen till late in October. And so it makes people wonder, this is maybe a little harder than we thought it was going to be. And so maybe there's some uncertainty in the long run, whether this is going to be positive or negative.
Yeah, still less confidence. And it really does show up. We've asked it now, I think, 6 different times. So you can kind of see the difference over time. And then the last question we started asking back in July, which is, would you say that things in the U.S. today are generally headed in the right direction or the wrong track? And this is obviously a little more than just agriculture and farm commodities, et cetera. So those results have changed a little, but not very much. A majority of the people in the survey, I think this month it was 2/3 of respondents say things are headed in the right direction. 33% this month said we're on the wrong track. That's a small shift compared to where we were in recent months. I think in prior months, we were up over 70% saying right direction and a little less than 30%. I think last month it was 28% said wrong track. So consistent with the prior question, I think, people are still on board with the policies that are being implemented. In this case, it's a little broader than just what's going on in agriculture, but it's very interesting.
I'm just curious. I mean, you borrowed this question from non-ag, the non-ag world. Don't you think this would be answered differently if this was all U.S. citizens? I don't think they'd be quite so positive. And so the point I want to make is I think the ag producers are probably more optimistic about us being on the right track than maybe everybody.
Yeah, that's a good point. And I think that's true. We should probably do a more direct comparison. I haven't seen, you're right, one of the bigger consumer survey organizations was using this question, and we basically adapted it.
Consumer sentiment's been down a little bit. And so,
consumer sentiment's actually quite weak. So different perspective. That wraps up the highlights of this month's survey. You can get the full report on our website, which is purdue.edu/ag barometer. And on behalf of the Center for Commercial Agriculture and my colleague, Dr. Michael Langemeier, I'm James Mintert. Thanks for joining us.